What's going on, guys? I'm going to make a quick video for you guys. This question kind of came up in my Discord today. Someone was asking or talking about, potentially holding a trade overnight. And I'm kind of thinking, like, why do that? It's not really the type of environment where you want to be swinging overnight. Why don't you just wait for something to confirm tomorrow, so forth and so forth. But it was because, they were under the 25,000 PDT rule, obviously didn't have more than 3-day trades in a week. First question that arose was, if you're using Thinkorswim platform, which if you're using many brokerages, I think, one of the only ones that doesn't really do it is Robinhood, right? But you don't want to be day trading or scalping on Robinhood anyways. They get horrible fill times and horrible fills anyways. This video is, if you guys are set up on a margin account and you're under $25,000 and you strictly trade options, there's no reason to have a margin account. Okay. There's no reason at all. What's going to happen in a margin account is that you're going to fall under the PDT rule, which is the pattern day trader rule. You're only going to have 3 trades per 5 rolling day period. So let's say, for example, you enter into a play today, you have no more day trades left. That play is particularly up $300, $400. You're forced to hold overnight just due to the fact that if you were to sell, you're going to, get a PDT rule strike against you. And then that position gaps down and you end up losing all those profits. And now you have to sell for a loss, something like that, right? We can completely avoid that by just switching over to a cash account. How do you do that? All you have to do, especially if you're on Thinkorswim using TD Ameritrade, all you have to do is either create a support ticket, which you can do from your platform on Thinkorswim, or you can just go to the website, email customer support, include your account number in that email. And all you have to tell them is this, and it's this simple. I do not want a margin account. Switch me to a cash only account. Please do this ASAP. I don't want margin. That's all you have to say. They'll switch you over to a cash account within 28 to 48 hours. Typically, they're going to email you back within, 24 hours and say, hey, we put in the request. It's going to take one more business day, and then you're going to be switched off of margin to cash. Now, this is coming straight from the Thinkorswim platform here from TD Ameritrade. In my cash account, when can I use my funds again to trade? Cash account settlements procedures governed by federal regulation, blah, 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 state that funds from investments that you sell won't be able to put towards another purchase, which is another trade, until the first transaction settles. Regulation T settlement times are T plus 2 trading days for stocks. So if you trade stocks, and let's say, for example, you buy 10 shares of Apple today, you sell 10 shares of Apple today, that money won't be clear for 2 business days, which is Tuesday, Wednesday. Okay. If you do not trade stocks and you trade options only, it's T plus 1. T plus 1 for options. So for example, let's say you bought 1 contract of Apple today. You made a little profit on it. You sold it for a profit today. When do those funds settle? They settle overnight. So you will be able to day trade that money tomorrow. Let's say you have $1,000 account, and let's say you buy $1,000 worth of options today. Let's say you make $200 on those particular trades and you sell them today. Tomorrow, those funds will settle and now you will have $1,200. Your original $1,000 investment will come back. It'll settle overnight. You don't got to worry about only being able to take 3-day trades. Now, here's where, let's say you have a $1,000 account, and let's say you use $600 today, right? And let's say that you try to go into another trade, and that particular trade is going to cost you $600. You will not be able to buy that because the cash available to you will only be $400 left. If you spent $600 of your $1,000 and you go and try to buy another call option or put option, and those premiums cost you $600, so you just can't buy it. You can only buy options with the amount of money that you have in your account. This is pretty self-explanatory, that part. But again, if you want to get away from the PDT rule, you're under $25,000, all you need to do is switch to a cash account. PDT rule does not apply to people that have a cash account. You can day trade. You can put in 10 trades this week as long as you have the money available to trade. Just also remember, if you have $1,000 in your account, you can essentially, buy 10 contracts at $100 a piece, make 10-day trades today, close them all out today, and tomorrow all of that money comes back. You'll be able to trade another 10 trades, and then you can close them out. You can be able to trade another 10 trades, or do whatever. Let's say you buy you enter into 2 trades. Each of those trades costed you $500 a piece. So that's 2 trades totaling your $1,000 that you have. You buy and sell those trades today. That $1,000 comes back to you tomorrow. It settles overnight. I hope this helps. Very, very easy fix, guys, especially if you're new to trading and you have under $25,000 in your account and you only trade options. Definitely go to a cash account. There's no reason why you wouldn't. Why would you want to only have 3-day trades? Why would you want to be forced to hold the trade overnight because you can't sell? That's ludicrous. Get that taken care of. It'll take you 24, 48 hours to have it all squared away, and then you guys will be golden.